Matt, from RealPage, multifamily momentum is shifting in top U.S. markets. What's new? What's going on?
Yeah. So the momentum they're talking about here isn't necessarily rent growth momentum as much as apartment permitting. The permitting is going up. The nationally, it's about the same. It's maybe a little bit of an uptick, but in specific markets, it's gone up considerably. They have Dallas and Houston. These are huge markets, and permits have gone up in Dallas by 21.1% and in Houston by 29.3%. That's a big number, especially places like Dallas, where they're already building a ton of new apartments, and so that increase is really considerable. I'm very curious to see if this is going to continue or not, or if this is just if it's just like a 1 month thing. But like these are very big numbers in very big markets, and it suggests a lot of people think that there are going to be people wanting apartments. Otherwise, they wouldn't permit them. And I also want to point out Columbus in here as like kind of an outlier from the Midwest, that it's also seen a 25.4% change in the units permitted. This was something that I thought was like a little bit confusing. But it does make sense because we're still right now talking about how in 2026 there's going to be a jump in apartment demand because of the gap in apartment building. I mean, there was a lull in apartment building for the past couple of years, and maybe these market by market, these select markets are kind of hip to it, and they're like, oh, we want to capitalize this, be the kind of first mover in this space where there may be fewer apartments in the future, so people are looking forward to that.
Yeah, talking to real estate developers, it's not like there is absolutely the will to build more apartments. Developers want to build. The challenge has been securing the equity financing to be able to actually build it itself. It would appear that at least in some of these cases, that developers are able to secure at least enough of that equity financing.
They can convince like investors and other
They can get investors on board. But also, it's interesting. These are a lot of the same markets that are currently experiencing significant amount of oversupply right now, negative rent growth. Now they do have the population growth. So you can justify a little bit of like there's going to be a need for more apartments in these markets. But you've already built a lot of apartments recently. One question I have for you, Matt, I guess how should we think about the percent change year over year? Because we've got some base effects that we're dealing with also because construction was so low last year, was it not?
I think that it's certainly a case, especially for some of the Sun Belt markets where there's a little bit of swings. But some of these places like Columbus specifically, it has had significant, like sustained, elevated deliveries, and they're coming down. But I just think it's really curious and really interesting that some of these what we would call oversupplied markets still have people getting excited about investing in building and making new apartments on top of the old oversupplied markets. I have to think that there's a reason for that, and it's not just like overhyped. Like people are confident, people are willing to put their money on it, and so I would take that as a credit to the longer term strength of the apartment market. Period. I don't think that it's foolish, especially if some of these developers are in they are building in a market that's is a little oversupplied, but it's a submarket that's doing well.
Well, that's what I was going to bring up is that when we just look at Houston, Pasadena, the Woodlands, that's a huge area. These are large MSAs, and as we know, granularity matters, nuance matters, and one whole market is neither good nor bad. You can have some markets that are generally rougher than others, but a lot of times, developers, especially in some of these markets, there was a high concentration of the new supply. And so there are other submarkets maybe didn't get that much new supply. And so you may have some positive rent growth that gets overshadowed. And so there could be some areas in Houston or Dallas and Austin and Atlanta that, are still undersupplied. People are still moving in there. And it's just those few areas that had a heavy concentration of new development that may see a little bit of a pause. But it's fascinating that we basically have the same culprits that have seen so much supply, they're going to get even more.
Yeah, it's like these markets are super sensitive to the larger changes, maybe that are slower. You see a little bit of a dull, of a dull increase when it comes to the national level, but in this you get this kind of extreme example, whether in like places like Orlando, which has had a 47.7 increase in permits.
Yeah, that's incredible. Now, I mean, the idea here is that they want to be delivering.
Yeah.
They all want to be the only ones, which clearly they're not going to be the only ones. Delivering in an environment where there's no other new properties, no other new apartments being delivered. It doesn't look like anyone's going to be on their own, though. Looks like everyone's had the same idea.
Totally.
But you also have to, put yourself in the developer's shoes. Let's say you're a developer that's based in, I don't know, let's say Orlando, Florida, and you develop in Orlando.
That's your business. You got to build.
That's your business.
Yeah.
Exactly. You have to. If you don't build, you're out of business essentially. And so you're looking around and saying, look, there's still some areas where we're going to need housing.
Yeah.
We still have a deficit of housing in this country and in their particular markets. And it's my business. So at some point, I need to start putting shovels in the ground. And I'm going to go back to my investors and try to convince them to invest in my deals. For the longest time, they're having a hard time doing that. But you're right. I mean, this is an obvious indicator that there is serious money that is backing multifamily recovery.
Yeah. And again, like, it's serious money. These aren't fools. And so there is a profit motive for them to make sure that these are sound and it's not just like chasing a dream. I think also that it's an example of how much diversity there is in not only apartment performance, but in construction trends. Yeah. Things are moving different. The economies of these places are a lot different. And it seems like it's just getting worse and more varied in 2025. Maybe when things balance out, things will get the same. I kind of hope not, because I think it's really interesting to track out these differences and see how one individual market is moved by different things compared to another. It also illustrates the importance, I think, here's a little teaser, we're bringing on John in just a moment, the importance of having an accurate forecast and being able to predict. Okay, so usually, you take permits and you jump and you think in 18 months there's going to be new apartments, but it's not always 18 months, and not every single permit turns into an actual built apartment. Yep. And there's lots of other variables like construction costs and other economic variables and variables within what the starts and all this kind of stuff that is different for every market. And I was just talking to John, who will come here in just a moment, about, he's running it at the national level. And he's like, to run this on an individual market level, it takes a lot of time. Maybe he's using these kind of machine learning techniques that do a lot of calculations really quickly, but it's still setting up each variable and making sure all the measurements are right. That takes time. And it's just because there's a lot of differences. I'd like for all these to be the same if it's for the ease of coming up with these graphs, but I don't think that they're going to be the same. And again, I think it's just a little more interesting when we got more to track here on the Gray Report. So
absolutely, yeah. It's going to be. Yeah, I was just doing some quick back of the napkin math, Matt. I mean, this is could be anywhere between $30 and $40 billion worth of investment. That's debt and equity. Mm-hmm. But that's think about it. Close at least around 10 billion, if not more, of probably equity that would have to be deployed to build this many units. And this is just this is just the top 10 metros. Yeah. I'm not talking about the rest of the country right now. That's a lot of capital that is betting on a strong multifamily recovery, because you wouldn't make those investments if you did not think that those markets were going to recover and they were going to experience positive rent growth in about 2 years or so.
Yeah. No, it's a very good point.
Fascinating. I think it's the perfect time, Matt. Let's bring on John Chapman. He was our intern for the summer, but really he's kind of like our research scientist. Really excited to have him. Let's bring John on.